The S&P 500, the Nasdaq 100, we're talking about here on the day. Now, going into yesterday, we talked a lot about opportunity. That's what we talked about. But the underlying notion that we've known is you break below 4,300, you break below 14.6, either one of those, and you have downside conviction and confirmation. You don't believe me? Go to my Twitter. I've been posting it nonstop. You've seen it. I literally every single day I have this for you. Same story told everyone here. On support, you break below, you're weak, right? That's you know what to do. It's all been here. It's all here on Twitter, right? You know what to do, when to short. You get below it. That's what you expect. And today was a little bit of a shocker. You got that action. Now, a few things I do just want to say. If you're not following, subscribed, I have to ask you to do that. It helps out tons. But I don't want to waste too much time here. Appreciate it. Unsubscribe if you don't like the content. I don't know. Discord link also too down below. It's not a signal Discord. This is to help you get from where you're at to hopefully to get to trading on your own and understanding how and why we take trades in the market and what to look for to help give you an edge, right? And you're with me and Jay all day long. We're in there 24/7. So anyways, looking at this action, I want to go really quick to Twitter. And I really think Twitter is one of the best sources for me to communicate with you guys as far as just community as it is, right? Yesterday, I've been all day. NQ showing more resilience. So you lose 4,300 on ES, and I'm back to bearish. Until then, I expect upside, right? Because you keep bouncing at this level, right? Now we zoom in. Let's go. There's a few things I have to cover here. So one, we're going to go to just normal old ES real quick. I just want to be able to separate these charts. So we go here, like the 5 minute, right? This is before. You can see on let's go to the 15 minute actually. Constant bouncing at this level, right? Just nonstop. 4,300, a little bit under. Bounce, bounce, bounce. You got another bounce this morning, and then you drop. Now, what you drop from was JOLTS job openings. I don't know. People are saying, look, I understand what the Fed wants. Fed wants higher unemployment. That's what they want. JOLTS job openings came in higher than expected, which is kind of in line with what the Fed wanted, right? Now, what I will say, if you look back at the past 10 JOLT job opening readings and the data that came out from that, you have not had significant volatility from that. So again, the biggest things in my opinion that will impact the market and give you direction, PCE, CPI, PPI. Everything else is a little bit secondary. Those are the inflation readings, and the job reports are going to be back and forth. The next job report might be lower than expected. So I don't want to blindly put faith in that. Don't want to say, let that be known right now. Just let that be known. But obviously, you sold right through. Now, the biggest takeaway from this sell-off that you had this morning, right, is a few points here. You've been bouncing off of 4,300, but it's been very minimal. Very, very minimal. That's what I was saying yesterday. If you were to get buyers to step in and you got confirmation above 4,350 like we talked about, or even broke above, local highs here at 4,330, max upside I saw was into 4,400, 4,380. Now, NQ, that's a different story. I think you could have got more love there, but you didn't. Anyways, so what happens here? You break down, you retest, boom, you shoot down today. That's the action. Now, again, I also want to highlight here on the daily, right? So you can see what happened. You had our previous demand level marked out here. As you can see, we invalidated, broke below. We have a bear flag into it and then rejecting back down. You also have your 100 and 200 MA right there as well. Pretty gross. Also been warning everyone on Twitter about this. This is why I like to go to Twitter, so you can go back. You can check if I'm lying, if I'm twisting anything to any sort of way. September 29th is when I posted this, so everyone had it, right? And so that's where we're at. That's how we're moving. Now, what I will say, though, the disconnect is still there. Now, I do think NQ is at that borderline of breaking. Don't get me wrong. It's dangerously close. You want to break down, right? You're back at 14.6. You break 14.6. I think you're going down to 14.25 instantly, very quickly. So what are you looking for here? You're looking for a break of 14.6 and then continuation to the downside. You have not been able to have that so far. The whole premise of the way that we trade, the whole premise of the way that I attack the market is getting confirmation, meaning you break and then you watch the reaction, right? I don't go short just off of, quick thoughts or emotions or just random opinions. It's all based on how we break and how we react to those levels based on volume, etc. So those are things you have to consider. ES is already doing it. Now, the one thing that I think is interesting here is SPY. And I think I have to put a little bit of emphasis on this. And we're kind of taking a while to go through futures, but this is kind of important. So really quickly, the confirmation to the upside was above 431. Right? Downside, you got below 426 easy when you dropped. Now you're coming back into a major inflection point. We have to understand this. Okay, this is your daily 200 moving average. This yellow line is your weekly 100 moving average. I've always have to go back and forth between those. They're basically on top of each other at the 418 region. 418, 419 roughly in this region, right? And you're coming right into it. Put it on your chart. Now, when you zoom out, you get a little bit more conviction. Let's go to the weekly time frame here. Now, I just want to mark out this level for you so you have it, so you can see where it's coming from, why I think it's so significant, right? Now, we're going to mark it out for 18 locally about right here, right? Go to full screen. Again, we'll move it a little bit more. Okay, 418. Let's move right there. I could type it out if I wanted to too. So you can see, mounted it here. You pushed into all-time highs. Wick. These are weekly candles as well, so you can see. Bear trap, destroyed. Rejection. Remember all this, and you shot. This is a huge level. It's in my opinion, the line in the sand. Okay, now from this point, I'm going to tell you a few things and just give you an opinion here. If you break below 418, ES is going back below 4,200 quick. Personal opinion. You break below 4,200, I think the bull case or this idea of moving into all-time highs by the end of the year or early next year kind of gets put on the back burner. If we remember, below 418, we were stuck here from essentially May of 2022 until May of 2023. So for 12 months, we got stuck in this range. Understand that. You also put in a lower high potentially if you break back down, which is also not, buenos nachos. So those are things that worry me here. But what I'm saying here, I wouldn't be hammering shorts at this position. Now, if you break below 418 and you retest it, now we're in business to talk. You have opportunity. So for instance, tomorrow we open up at 419 and we go below 418 to 416 and retest 418 and get rejected. That's a good opportunity to short. But you have to be able to watch what's happening here. And, you prefer to see rejections on higher time frames. Okay. So understand these levels and where we're going in here. So again, massive level in which we're coming into. Understand that. Keep your head on a swivel. Be careful. Right. Again, I want that to be really clear. I also do want to say something real quick. Now, I understand, and I'm going to be totally transparent here. Totally transparent. When it comes to sometimes the thumbnail, the title of my video, right? Some of you guys have been here for a while. Some of you guys are new. I admit, I 100% make clickbait titles, thumbnails, whatever it may be. But when you watch my videos, just like you're watching this one, 100% of the time I can say wholeheartedly, I never mislead. I always tell when I lose a position, like when I got closed out of NVIDIA on the short side. Remember, I went short at 439 when you rejected and you gapped up to 446. I showed that loss, right? I always want to be transparent, right? I always want you guys to be able to understand that I'm being genuine with anything I'm saying, right? I posted in here, right? Closed out the $416. We got them in at around, I think, $17 right there, right? Just so you can see. I want you guys to understand that I'm trying to be as transparent as possible. But to a certain degree, I have to make content that people want to click on. I hope you understand that. But anyways, so I want people to understand that. But I have to tell you, your part is you have to pay attention to more than 30 seconds of a video, and you have to pay attention to something else besides just the colorful picture. So again, this is where I think we're coming into. The reaction here will be key. We break below this, and you're looking bad. Now, into some of the fundamental areas, and we've talked a lot about this, right? So DXY, you're coming, you hit our target. Simple as that. If you haven't been following on the channel, if you have been and you're curious, just rewind the past few days. DXY, the target was into basically 107.2. Okay. Now I wouldn't consider our target of 107.8 personally. I wouldn't. All the rejections were right here. You can even extend this back a little bit further. You can kind of see where that stems from, even right here. Okay. Above this though, if the dollar continues to run, you're in trouble because the dollar is pretty illiquid into 109. Now you could argue potentially 108.5, you have some resistance here, but you're pretty illiquid in this area. That's concerning. Now on top of this, right, there's good news and there's also some bad news. So we go into the 30-year. This is the daily. I always recommend looking at these fundamental indicators on higher time frames alone. The 30-year. I want to go again. You go back and watch the videos. What we said. Right? I mean, you've already broken through our target of, 4.8. You're pushing into the next target, 5.2, coming in quick. This is the 30 year, the 10 year, coming back in. You're hitting 4.8, next target, 5.25. The 5 year, we mentioned this as well. We said the 2 and the 2 and the 5 year were lagging. We already knew this. But again, we knew the 30 year and 10 year were moving already. The 2 and 5 typically lag the 30 and 10. You're pushing up on these, breaking highs. The 2 year is the last one. The 2 year starts ripping. It's going to get bad for specifically, most likely, banks. Okay, this is the concern. On top of this, you had Bostic today. He said, you can Google it real quick. Bostic 1 rate hike. So this was his comment. It took 5 seconds to Google search. Fed Bostic sees no urgency to raise rates again, but cuts a long way off. His expectation on cuts were 1 cut for the whole year of 2024, and that was at the end of the year. So this was also pretty big and terrible for the market. We knew going into this week there was no real big data pools. It was just Fed members. And again, you cannot predict if Fed members are going to say certain things. You really can't, especially when it comes to rate hikes, pauses, etc. You don't know what they're going to say because at the end of the day, Powell is the only one that really matters. So that's my viewpoint there. And it's kind of like a perfect storm that's just happening in here. But again, the biggest levels I'm watching, SPY getting below 418, pretty big. You probably see ES test or break below 4,200. Number 2 is Nasdaq. If Nasdaq gets below 14.6, and it looks really likely, this is pretty terrible. Nasdaq gets below 14.6, it's going to be bad. I see almost instantaneous action to 14.2, 14.3, quick. But you need to get confirmation on Nasdaq first. Now, when we slide over to equities, a lot of these names that I liked, for instance, Apple, you needed to get confirmation in a direction. For instance, on Apple, I loved it to the upside, but you had to hold above 174. If you broke above it, I was going long. But you rejected again here, right? You can't do nothing about it. NVIDIA, we said, if you get above 464, shorts will cover instantly. Again, today, you come back into some of your levels, you get rejected, you're pushing back down. Equities will not move without the rest of the market. We need to understand that. Your stock, Microsoft, it may look great. Now, you may have some short-term news, right? But at the end of the day, equities are going to stay in line with futures. That's why we track them so much. So understand where we're at and how we're moving. And so when I'm looking at Nasdaq breaking down, ES, really getting destroyed, Dow getting destroyed, IWM back at March lows, I have to have the representation and understanding that you're probably going to follow those indexes. So it's hard to be bullish on these here unless you're getting key level holds, which is why I continue to say that. If you go watch my previous video, it's all based on holding above key levels. I don't know how else to say it. Now, I get some of this if you're a new trader may be confusing. That's why on our website, we don't charge for the education stuff. If you want to learn by yourself, you go to the website, go over to education. It's totally free. All free information, right? If you're going to put in the work for yourself, go for it, right? We make it for you. So understand where you're at and kind of what's happening here. If it's confusing you, ask questions because we want to answer your questions. We want to help. We try to answer every question down below. So again, I'll see you guys tomorrow. This is what I'm watching. Indexes are a major watch right now. This could get really interesting over the next few days, especially going into next week with CPI and PPI potentially being pretty detrimental for the economy.